Hello, with me today I have Ashley Kelty, Director and Oil and Gas Research Analyst at Panmure Gordon. Hi, Ashley.
Hi, how are you?
Very well. Look, Ukraine has obviously had a significant impact on oil over the past 12, 15 months. But what would happen if there was a resolution to the conflict tomorrow, or has the world just adjusted and moved on?
I think in terms of oil, the world has essentially adjusted and moved on. The sanctions have not had as much of an impact in terms of supply as I think the G7 and EU would have hoped. Yes, it has hurt Russia financially because the crude that they are selling to China and India primarily has been at a huge discount. However, they are still able to sell crude at relatively similar levels to that pre-Ukraine. However, the real impact of a settlement and Russia coming back into the market would be in the gas markets. The gas markets have been impacted more than oil, particularly in Europe. And we've seen the prices were rising even before Ukraine, and that was a consequence of years of underinvestment. However, the removal of Russian gas from Europe has had a huge impact in that this year Europe will need to replace 60 billion cubic meters of gas that it received from Russia last year, even with the impact of sanctions factored in. However, due to the mild winter and the ample supply of LNG last year, prices have remained high, certainly well above historic levels, although they have come back to much lower levels. Europe dodged a bullet through the warm weather, and ample storage allowed them to keep the lights on, and there weren't any blackouts. However, the challenge will be this year in refilling the gas storage facilities. Yes, there will be plenty of LNG. However, as China reopens, a lot of that LNG will be displaced from Europe to Asia, and that will push prices up as well, coupled with the replacement of 60 billion cubic meters of Russian gas. So as a result, I don't think there's any scope for gas prices to drop below current levels. I think there is also an element of hubris built into that, in that a lot of people feel that we got through last winter without any major problems, and that we will be okay in the future. It was always the case that this coming winter was always going to be the real challenge, and I think that prices are likely to rise, and it will be a difficult winter for gas coming on this year, because there aren't any major LNG projects coming on stream this year that will be able to create the supply to meet growing demand in the next year or two.
So I'm thinking in terms of the UK consumer and next winter. So gas prices are coming down. A lot of the UK consumers are seeing, or will see, perhaps lower bills. But you think there could be another shock coming further down the line?
I think prices are arguably too low at the moment, although well above historic levels. As I mentioned, this winter will be particularly challenging, and I think we will see gas prices remaining relatively low over the coming months, but I think they will start rising in the second half of the year. In terms of when that will feed into consumer energy bills, that will be towards the back end of this year and into 2024. I think there is scope, given the reopening of the economy, that there could be blackouts this year, and the lower price will also encourage a lot of industrial facilities which shut in last year when gas was 300-400 pence a therm to reopen when it's less than 100. and that will increase demand. And I think it's likely that we're going to have a colder winter than we've just experienced, and demand will go up. And with LNG supply being reduced as China reopens, I think prices will rise markedly, as Europe will have to compete with Asia for LNG. And obviously the price will increase as the US and Qatar are agnostic to where the cargoes go, as long as they get the best price.
Great. Ashley Kelty, Director and Oil and Gas Research Analyst at Panmure Gordon. Thanks very much for joining me today.